Good morning, everyone. Um, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to another promising edition on the Forex Morning Mastery, as we are going to be taking another fresh new perspective into the financial landscape. And of course, as usual, we will be using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action across the assets on our watch list for this week. Well, since the beginning of this week, we have been monitoring three major assets, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we've done very well across most of these assets. It's only the GBPUSD that we were able to make a reasonable amount of profit, but besides that, we made significant amount of profit across the assets on our watch list for this week. So we are going to be taking a quick look into what has really been going on in the market, and of course use the information we gather to strategically position ourselves ahead of today's trading session. Well, my name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host. And for those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around. So for the sake of clarity, let me quickly give you a brief of what we really do here. As technical traders, we usually gather on a daily basis, come together as a community, and engage in follow-up and reviews of the current assets on our watch list. Of course, in preparation of both the London and the New York session. The session kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC. And I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And my aim here is to equip you with the knowledge and skills necessary to make informed decisions independently. The more time you spend with us here, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, you are highly welcome on board. So with that being said, we will be diving right into the business. I see a couple of comments here. Jonah Haruna, good morning to you. Eric Mudavadi, good morning to you. Glad to have you around with us this morning. So as usual, the first thing we normally do is, of course, to check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. And on the economic calendar, we usually focus on high impact event from the economies that affects the assets on our watch list. And based on the asset we are looking at for this week, we will be focusing on data's economic features from both the United States and the United Kingdom. Now, from the features here, I would like to take out all the other economic dockets, so we just include only the US and the United States. So let's give it, let's leave the medium impact event so that we can have an holistic view into what majority are looking forward to today. So if we apply the filter, all right, so for today, Thursday, November 9th, we have a handful of high impact events coming in from both the United States and the United Kingdom. Now, the first one we are looking at here is a speech which is coming up in about 12 minutes from now, and that is the speech from U Peel. Well, U Peel's had a speech at the beginning of this week, I think, where he mentioned that there is likely going to be some rate cut for the Bank of England, probably in the third quarter of next year. And the Bank of England governor yesterday mentioned that that is not in the case, not in the pipeline at all at this point in time. So, Hu Pil is the chief economist and executive director for monetary policy, monetary analysis and research of the Bank of England. So he will be giving a speech in the next 11 minutes now. And of course, majority in the market will want to look forward to see what he will be saying to give us clues into what to expect going forward. Then in about 5 to 6 hours from now, we are going to be witnessing the initial jobless claims coming in from the United States. Well, this data here is released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. Well, a larger than expected number indicates weakness in the labor sector, so we want to look forward to what the actual data will be. And if we look at the previous data for the month of October, it came in at 217,000, which is a little bit high, maybe. And we have consensus projecting 218,000 for this month. So we're looking forward to see what the actual data will be. And from what we're seeing so far, based on the projection from the economists, it's quite clear that they're expecting a contraction in that sector. So let's see what the actual data will be today. Then later today, we have a couple of more speeches from Boston and Barkins. And then we have the chairman's speech coming up much more later in the day. And this is one event everyone in the market will be looking forward to. And of course, as technical traders, we do know that the anticipation of this event definitely will has a tendency of influencing the market sentiment, which in the long run will reflect on the chart as price action. So with that being said here, let's dive right into the chart. And as usual, the first asset we will be taking on this morning is going to be the USOILSPOT. What a phenomenal week we have here on the USOILSPOT, as we have been selling this asset since the beginning of this week, riding the momentum all the way to the downside. In fact, we have multiple entries. We have 1, 2, 3, 4, 5, and okay, we have 5 positions running at this point in time. Well, personally, I'm already out of this trade. And for those of you who are with me on both my TradingView and Telegram platform, I did mention that for those of us who still have a sell position running right now, we want to be moving our stop losses and secure that correct position. And I do hope you did that, because we're beginning to see some traction evolve on this chart, especially during the Asian session. Well, presently, from a general perspective, it's quite clear that oil prices are still struggling to recover. And we saw some insight into the attempt to do some recovery during the during the Asian session. And of course, fundamentally and economically, we have been seeing the lingering concerns about diminishing demand in the US and the China as regards to demand for oil. As you will see, this development is exerting downward pressure on the USOILSPOT. And in fact, I'm of the opinion that these economic factors is tending towards a bearish outlook, and we cannot ignore the bearish momentum for today too as well, unless the market states otherwise. And in fact, if we see the opposite direction in price action, I will still consider it to be a retracement of this bearish impulsive move we've been enjoying since the beginning of this week. Now, going into today's trading session, how do we intend to capitalize on the next move? What is going to be our plans? How do we intend to, if it's going to be a buy position, what is it that we want to see on this chart that will make us feel comfortable buying the USOILSPOT? And what are the things we want to see on this chart that will make us continue to add more sell positions to our existing trade? Well, while trying to dissect the current market structure this morning, the first thing we want to emphasize here is the fact that price has been bearish since the beginning of the week, breaking down our key level at the $80 mark. And along the line, we can see how price consistently found lower highs and lower lows in that regard. And remember that we had this descending trend line marked out on our chart at the beginning of the week, and this has been guiding our bearish momentum. And of course, you know how we treat our descending trend lines in this community. As long as price remains below the descending trend line, we feel comfortable in our sell position and look out for selling opportunity. However, if at any point in time today price breaks out or breaches the trend line, then we want to start considering buying. Now, if we zoom into this current structure and looking at what has been going on in this market in the last 24 hours, it's quite clear that since price tested the $74.90 level, which happens to be the lowest point price action has been since the beginning of the week, we begin to notice some buy pressure resume around this area. Now look at what happened here during the later part of the New York session. We saw sharp rejection bringing price to the upside, and in fact in the last 3 to 4 hours we saw how it had become difficult for sellers to break through that level. As you will see, we have a higher low in that regard. And whenever we notice higher lows on a current market structure, it's a sign that buyers are gradually gaining momentum behind the scenes. And if that is going to be the case, how do we intend to capitalize on that? Now, if we take a further step to look at what is really going on here, you will see that we begin to notice how price action is gradually transitioning into what is looking like a double bottom structure. And one thing about transition of price action into double bottom structure is that the next thing we do is to mark out a neckline, which we will be using to validate the potency of that reversal pattern. And in fact, we have a neckline situated around the $75.85 level. Remember, this level was initially a support line during the early hours of the New York session yesterday before it was broken to the downside. Now, what we are going to be looking out for here is price action breaking out of that neckline to inside an uptrend situation. And another intriguing thing about the neckline here is how it shares a beautiful confluence with that descending trend line we identified earlier. So if price breaks out of the neckline, price will also have broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And in fact, a breakout of this trend line will be the first time price action will be breaking out of that descending trend line this week. So you can see we have a very beautiful and sweet spot here looking out for buying opportunities. Now, what are we going to be doing to buy? Well, personally, we want to look out for a breakout retest of structure, that is breakout of both the $75.85 level and the trend line to retest of structure to inside an uptrend move. However, for those of us who are immensely profitable, let me use that word this week, because we were able to scoop in over 1,000 pips in profit on all the 5 positions we have here. So for those of us who are profitable so far this week, we can afford to place a buy stop order above the $75.85 level, because we can leverage on some of the profit we made so far this week to test waters above this level. And if it doesn't work, we know that we are only risking some of the profit we had made. And please note that you do want to be having your stop losses in place. In fact, I'm looking at anywhere around that support line with about 85 to 90 pips stop loss on that one, and let's see how price action will play out here. However, if you are new with us and this is your first time taking a position on the USOILSPOT, so and that is you are coming in from a clean slate, then I will encourage you to exercise patience, like a breakout retest of structure before you want to be jumping into this counter trend opportunities. So this is the condition we are going to be looking out for to buy the USOILSPOT today. So we have a beautiful level which shares a confluence with that descending trend line at a $75.85 level, where we shall be looking out for buying opportunities at the breakout of the structure. So that is the only condition we are looking out to buy. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. The financial market is a very fluid environment, and for us to be consistently profitable, we have to be as dynamic as possible, hereby getting ready for any potential trading opportunities the market presents to us. Now, if we are going to be considering selling at this point in time, that is, if price takes us out of the buy position and continues to drop to the downside, what is it that we want to see that will make us feel comfortable selling the US Oil Spot? Well, first of all, I want to see price action drop below the descending trend line, that is, stay below the descending trend line. That's the first criteria here that will make us feel comfortable selling. Now, secondly, we want to see price take out the support line at the $74.90 area, which happens to be the lowest point price action has been for this week. Now, if I want to sell, I want to have a sell stop order below the structure to join the decline to the downside. And remember, if you are new with us here, you want to exercise patience for a retest of structure to happen before you jump into any positions here. So it's quite a simple setup for today's trading session on the US Oil Spot, as our center of focus is basically between the $75.85 level and the $74.90 area, where depending on the direction of the breakout of the structure, will be welcoming a trading opportunity for us today. So these are my views on the US Oil Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Alright, so in the absence of no questions, I take it as a confirmation that we are all on the same page, and I do hope you marked out these levels on your chart as you will be doing them today to guide your trading decisions. So with that being said, we will be moving on to the next financial asset on our watch list for today. So the next asset on our watch list for today is the cable market, that is the GBPUSD. We've been having a sell position running since the beginning of this week, but during the New York session yesterday, we had some buy pressure resume, taking us out of those sell positions with a modest size of profit. You should be having a minimum of 50 to 60 pips thereabout on that sell position we took advantage of at the beginning of this week. And right now, after price took us out of that position, price action has been currently oscillating within a range, which further emphasized the level of indecision going on in this market. Now, before we go into the details today, I would like to mention some few things about the fundamental factors that may likely be affecting this asset at this point in time. One of it is the sluggish US Treasury bond yields. In the last couple of days now, the Treasury yield has been nosediving to the downside, giving the pound sterling some comfort to build up on a bullish sentiment ahead of the first chairman's speech coming up later today. And in fact, in the absence of no major economic features from the United Kingdom, we are really in a limbo right now. So we want to see how the market will play out based from a technical standpoint to guide our decisions for today. Now, for those of us who are joining for the first time, I'm of the opinion that maybe we should have we should quickly run through what things are looking like before we took the decision we made at the beginning of this week. So at the beginning of the week, remember that we were buying the GBPUSD after noticing price action confined within a range between the 1.239 and the 1.23650 area to give us an insight into the level of indecision at that particular point in time. And of course, you know how we do it in this community whenever we have this kind of simple flat channel emphasizing the level of indecision going on in the market. We have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, at no point in time did we see price break down the support line at the beginning of the week. So we took advantage of this buy position, which actually moved about, we had about 40 to 45 pips on that one before the bearish momentum came in. And right here during the later part of Monday, remember we had price break down our support line here to trigger the sell position, and since then we have been selling. Remember, we also added one more positions at the breakdown of the 1.23, and during yesterday's trading session we also added another one. And of course, I did give you an update on both my trading view and Telegram platform that we want to be moving our stop losses to secure the current position. And if you had done that, you must have been taken out of those positions at a reasonable amount of profit. And for those of us who took advantage of that move, well done, and kudos to you for being on standby to capitalize on that move. Now, with the situation we have here, and how do we intend to capitalize on the next move? Well, first of all, we do want to acknowledge that price action has been bearish since the beginning of the week, and in that regard we have this beautiful descending trend line emphasizing the series of lower highs that's gripped this market since the beginning of the week. However, for those of us who watched my video on the GBPUSD during the weekend, you will remember that I mentioned that the momentum is looking very bullish and that we are likely going to be seeing some downtrend scenario. We could be a reflection of profit-taking activity, showing on the chart as a retracement move. And at this point in time, we are already witnessing some retracement phase, but the question at this juncture is how long or how far will this bearish momentum go before the resumption of the uptrend situation that started last week. Now, for us to have a better perspective into this, I would like us to scale up a little bit into the 4 hours time frame so we can have an holistic perspective into what is really going on here, and that will also help you guys to understand what I'm really seeing in this current market structure. Now, scaling up into the 4 hours time frame, remember what I said here. I took into consideration the nature of price action in the last 2 to 3 weeks, and the prominent structure here is that supply zone around the 1.23300 level and our key level at the 1.2300 area. Now, one thing you will notice about this level is that during the second half of the month of October, this level was serving as a major barrier for buyers. As you will see, every attempt by buyers to break out of the structure was met with strong resistance from the sellers, as you will see here. And not until the beginning of this month that we saw price break out of that structure with an engulfing and massive bullish candle to incite the idea of a potential uptrend situation here. And from a technical standpoint, whenever price action breaks out of a key structure such as this, in fact, we have 2 key structures here. The first one was the supply zone that was broken. Then the second one here is the ascending trend line I spotted here, which was also broken on Friday. And of course, whenever price action breaks out of the structures like this, we expect that some point in time price may do some retracement back into structure to retest it, where the appearance of a reversal pattern could incite an uptrend continuation. And in the last couple of days, for those of you who have been part of this session, I made mention how crucial the current structure we are in right now is. price is oscillating around that range, which has been a strong selling niche for the last 3 weeks here. And in fact, I'm beginning to see that sellers are struggling around this area, and this could be a reflection of market participants not wanting to place aggressive bets, especially ahead of the first German speech coming up later today. And one thing that everyone were looking forward to hear the Fed chairman say yesterday was as regards to the monetary policy of the Federal Reserve, but he never made mention of anything of such yesterday. Everyone is looking forward to see if there is a likelihood that there will be some rate hike at least before the end of the year. And since he's going to be having a speech today, everyone is looking forward to that. Maybe he's going to be talking about a monetary policy for today. So this is one thing that is causing a little bit of indecision in the market right now. And as you will see that in the last 36 hours, despite the bearish momentum that started this week, as soon as price got into this juncture, we begin to see some consolidation phase happen here. So it is very, very important for us to remain very, very cautious and patient around this area to look out for significant signals before we jump into any position. And in fact, this morning, while I was looking at this current structure, I'm beginning to see some pattern gradually forming around this area. So let's look at what really is going on here on the 1 hour time frame so we can have an idea of how we are going to be positioning ourselves for this move. Personally, I still believe that our price will go to the upside. Well, it's looking very bearish, of course, but I still have a strong opinion that price will be going to the upside. But if the opposite happens, we of course do want to be on standby to capitalize on that move. Now, let's scale down into the 1 hour time frame and see what I'm talking about here. Now, if we scale down into the 1 hour time frame, and considering the impulsive move that started at the beginning of this week, you will see here that price action appears to be gradually transitioning into a reversal pattern in the form of what is looking like a head and shoulder pattern, as you will see here. Now, one interesting thing about the head and shoulder pattern that makes me feel comfortable taking it is when the right shoulder, the higher low, the low on the right shoulder is a little bit higher than the low on the left shoulder. Now let's look at the lowest point on the left shoulder. Here the lowest point was around the 1.2260 area, and in fact in the meantime the lowest point for the right shoulder is oscillating around the 1.22750. So we have a little bit of a higher low around this area. And whenever we identify such reversal patterns on our chart, the next thing we want to be doing is to mark out the neckline that we will be using to validate that reversal pattern. And you know what happened here? The neckline interestingly shares a confluence with our key level for this week, which is situated at the 1.2300 area. Now, you know how we use our key levels in this community. Whenever price breaks above our key level, we want to be looking out for patterns and structures that supports the idea of buying, and with a neckline around that key level. And one interesting thing about that key level as well is the fact that it also shares a confluence with that ascending trend line we just spotted on the 4 hours time frame. So if price breaks out of the neckline, the key level, price would also have climbed back above the ascending trend line to give the idea that buyers are beginning to gather some momentum again. And of course, from a technical standpoint, when we see a reversal pattern like this, we want to see price break out of the neckline to validate it for us, retest of structure, giving us beautiful opportunities to join the uptrend move. So personally, I am positioning myself above the 1.23 area, which happens to be serving as both the neckline of this potential reversal pattern, is not yet validated yet, and of course the key level for this week. So I'm still holding on to a bullish bias here on the GBPUSD. So anywhere above the 1.23 area will be a very suitable area for me to look out for buying opportunity. And remember that you want to have your stop losses in place, which could be dovetailing to about 30 to 35 pip stop loss on this particular one. So let's see how the market will play out from this area. And in fact, if any new significant setup evolve, I will let you know in the comment section of both my TradingView and Telegram platform. However, in as much as we're looking out for buying opportunities on this market condition, you know how we do it in this community. We also want to keep tabs with the opposite direction as well. Well, if I want to start considering selling, in fact, I do want to see price action break down the support line here. This is the lowest point price action has been for this week. That is around the 1.22475. So we want to label this area 1.22475. So we want to label this area, and this area here, the breakdown of the 1.22475 will negate the idea of any potential reversal pattern here, giving us clues that the dollar will continue to rise going into the last trading day of the week. So our center of focus for today is basically between the 1.23 area and of course the 1.22475, which happens to be the lowest point for this week. And let's see how the market will react around the structure. And of course, if there's anything new that happens today, I will definitely let you know in the comment section of both my TradingView and Telegram platform. So I hold on to a bullish bias here, but if price drops to the downside, we want to be as flexible as possible to be part of that bearish momentum to the downside. So these are my views on the GBPUSD. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So if you have any questions, I will take the next 10 to 15 seconds off, and you can as well use that time to mark out these levels on your chart. All right, so I see a couple of comments here. Ronald Kalnin, I hope I pronounced your name correctly. Thank you for your feedbacks here. You want me to put US oil on my TradingView profile. All right, I thought, okay, I will look into that and make sure things it gets fixed. Okay, don't worry. Thank you very much on that one. Hadani Babalola, good morning to you. Glad to have you around with us this morning. It's been a while. Trust you are doing very well out there, and thank you for checking in on us this morning. Hello, Princess Abulokwe, good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next and of course the last asset on our watch list for today. All right, so the next asset and final asset on our watch list for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we've had quite an interesting week on the XAUUSD. We've been selling since the beginning of the week, riding the momentum all the way to the downside. And remember, I had a buy position triggered at the beginning of the week, which did not do very well at all as price action took me out. Well, it was a mistake for me to take advantage of that opportunity. I keep mentioning it in this community, how I did take advantage of a buy position where I wasn't supposed to take it. Now, let's run through how the week started for us in this community and what led to the decisions we made. Well, at the beginning of the week, it was more of a bearish momentum as the gold assets started on a weaker note. As we initially saw some consolidation phase where price was confined within the 1,993 level and the $1,987.50 area before the support line of that range was broken to the downside. And this was what got me confused at the beginning of the week. We saw some buy pressure resume around the 1,982, and in fact, because of Despite the breakdown of the support line of that range, I was of the opinion that it could turn out to be a false breakdown because of the appearance and emergence of buy pressure around this area. Now, I said here on Monday, this is where I made the mistake here. So I said here on Monday that we are going to be looking forward to the breakout back into the range, but not unless price comes up and retests the structure to incite an uptrend move. However, during the New York session on that day, we begin to see some buying traction resume around that descending trend line. So out of greediness, I decided to capitalize or risk the breakout of that structure, which didn't go well, of course, and price took us out of that sell position in a loss. But thank goodness we were able to recoup the loss we incurred at the beginning of the week, as we knew we positioned ourselves below the 1982 area, looking forward to the breakdown retest of that structure to capitalize on that downtrend move, and that was exactly what happened. And since then, we continue to add more sell positions to our existing trade. We added one more at the 1971. We added another one at the breakdown of the $1,964.25 level. That was on Tuesday, before we were taken out of all these sell positions that day. I think we had about 250 pips on that one. Then during our live session on Wednesday, we capitalized on another breakdown of the 1962, and this was what we were building on during our live session yesterday, where we said we will be adding more positions at the breakdown of the $1,957 area. So it was quite a very interesting week for us, and for those of us who still have a sell position running at this point in time, I do hope you moved your stop losses accordingly to secure all your positions. And if you have done that, well done to you for doing that. Now, with that being said here, how do we intend to capitalize on the next move for today's trading session? Well, for those of us who have been with me on both my TradingView and Telegram platform, we talked about this. I shared this in my commentaries, as we saw here that gold price is currently hovering around a multi-week low, as price was consolidating around the $1,947.50 level throughout the later part of the New York session stroke the Asian session today. And the ongoing decline in the US bond yield is putting pressure on the US dollar, of course, and I'm of the opinion that we might likely be seeing some traction build up ahead of the Federal Reserve Chairman's speech coming up later today, as we have a beautiful support zone to work with ahead of today's London and New York session. So for those of us who still have a sell position running, please move your stop loss anywhere around the $1,953.50 level seems most appropriate to secure your position. And for those of us who capitalize on this one, the breakdown of the $1,947.50 level, remember we had a sell stop order here. I shared this on both my TradingView and Telegram platform, that we want to be capitalizing on a downtrend, a breakdown of that structure. Remember, this is for those of us who are profitable so far this week. For those of us who are new, you want to see a retest of structure confirming that sellers are gaining momentum, something like this, before you want to be jumping in. But for those of us who are profitable so far, we can afford to leverage on some of the profit we had made to test waters around that area. And in fact, if it doesn't work, then we know that we are only risking some of the profit we had made. So with that being said here, let's see how we are going to be capitalizing today. Now, the first thing first here is price is bearish since the beginning of the week, and in fact we have a couple of descending trend line in that regard. So we have this trend lines here which has emphasized the bearish momentum we have here. Now, there is something interesting going on in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours in this market, as you will see how the 1947 area had become a barrier for sellers throughout these hours. So the inability of sellers to break through this area could serve as a platform that will incite an uptrend scenario. And I'm considering the potential of a reversal pattern. Though I have a sell position running here, it's currently running in a loss right now. If we get taken out, this candle here still has about 6 to 7 minutes to close. Let's see how it will close. If it closes right back above the 1947 and turning into something like a hammer candle, then we want to consider this as a signal that buyers are very present around this area, and we want to be anticipating buying opportunities. So what I'm seeing here is like a reversal pattern, considering the impulsive move that brought us to this point, something like this. And if the buy pressure persists here and price is unable to close below this level, then we might likely be seeing a reversal pattern unfold. And of course, you know how we do it. Whenever we identify the potential chances of price action transitioning into a reversal pattern, we want to mark out the neckline area, which interestingly lines up with that $1,953.50 level. And one intriguing thing about that neckline is the fact that it also shares a confluence with those descending trend line we identified earlier. Now, if price breaks out of the neckline, it validates the reversal pattern and of course confirms that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, this will be a very beautiful opportunity for me to join a bullish trend. So we'll be looking out for a breakout retest of structure, and in fact, retest of that area is likely going to incite a bullish momentum, giving us clues that participants in the market are finding the gold commodity cheap enough to start buying at that point. So our center of focus for today is basically within this range where price has been confined within in the last 13 hours. That is the $1,953.50 level and the $1,947.50 area. So what we are doing right now is to wait for this candle to close. Let's see if it's going to close below. If it closes below and breaks down and closes below the structure, then we want to be looking out for more selling opportunity. But if it happens that price climbs back above the support line, stays within that range, then the potential of price breaking out of both the neckline at the $1,953.50 level and those descending trend line increases. So let's see how the market will play out here. Patience is hereby required at this particular point in time. So I will encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So these are my views on the XAUUSD. If you have any questions whatsoever, or you need me to do some further clarification in an aspect you really did not get, feel free to let me know in the comment section. And if you have found this content helpful and useful in making your independent trading decisions for today, kindly support the project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance for doing so. And for those of you who had liked, I really appreciate you. Thank you very much from the bottom of my heart. And for those of you who are yet to like, please do. It's the cheapest way you can support this project. It doesn't cost anything. I really appreciate it as you do so. Thank you very much, guys. And let's see if there are any questions before we round off for today's trading session. Thank you guys for keeping the likes coming in. I really appreciate. God bless you. I just dropped the link in the comment section below. It's the link to the XAUUSD live window. which will be coming up in about 5 to 10 minutes into the New York session. And for those of you who don't know what this is a platform born out of popular demand amongst us in this community, where we all gather to monitor real-time the XAUUSD price action during the New York session. So this happens between the beginning of the New York session till I think 5 to 6 hours after the start of the New York session. So you do want to be part of that session. Click the link below, click on the notify me button so that you can get notified as soon as we come on live. So on this note, I want to wish us all the best of luck. It has been a wonderful moment with you guys today. I really enjoyed every single moment I had with you guys. Thank you very much. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us here, the better you will become in understanding our analytical approach and eventually be able to use the information you gather here to make your own independent trading decision. So on this note, I wish us all the best of luck, and I can't overemphasize the importance of a proper risk management strategy for every trade you are taking. Your stop loss is very, very important. The risk of every position size you take is also very, very important, as you want to live to trade another day. So ensure you secure your positions very well and don't jump into unnecessary positions. Let's allow our structures to mature before we jump into any position. And if you do that, well, of course, you will be very, very profitable. So on this note, I wish us all the best of luck today, and looking forward to seeing you all in the comment section of both my Trading View Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.